Hello, this is Brad with Spy Money. I'm going to give a few people a little chance to get in here. Some may want in here, some may not. Give just a few minutes here. I'm going to be looking at ES. I'm going to be looking at NQ. I'm going to see how we should have traded this today. We got a lot of interesting chop the last couple of days. Chop has not been well at all. I'm going to go ahead and get started on this, and what we are going to talk about is what to trade, when to trade, and how to trade. So we'll do a little recap on that. It'll help out. A lot of people ask me when I trade. I usually trade, and when I speak of time frames, I speak in Eastern Standard Time. I like to trade between 6 and 9 in the morning. 6 and 9 in the morning would be about right here to about right here. This is when I like to trade. The reason I like to trade here is, well, let's see here. I need to record that. Let me start all over. Okay, welcome to Spy Money. And we are going to talk about today's events on June 3rd, how you should have traded it, what would have actually worked out better for you, what to trade, when to trade, and how to trade, what indicators and so forth to use. So a lot of people ask me when I trade, and I like to trade in the morning. It's a lot easier to trade, and I like to trade from 6 in the morning, and I'm talking Eastern Standard Time, to about 9 in the morning. Now today we had news, so the news events make it a little bit harder. And what I trade with is the Momo indicator. It's Spy Money Momo indicator. And this one actually works really well. It's got signals for entries and exits. So it actually helps you know when to get in and when to get out. And there's different entries and so forth that you can use. But we're going to talk about how it would work today. If you would have got in or whichever. So right now we've got this set up where it enters on the bar close. We will have this by the end of the week. Actually in a few days, where this will enter about midway. So there will be a couple different entries. But if you'd entered here, and the most that you could have gotten would be $75. You probably would have not got that, of course, but you probably would have broke even, if not lost a little bit of money. So if you would have played it off according to the signal, you would have lost $75. So it depends on how you would have played that out. And then we have the next entry would come off the bottom because that is a bearish close. And the most that you could have made would have been $112.50. Now we all know that you cannot make that much money because that is the max, and you didn't know where the max was. And even if you did, it has to go one tick above that. So, worst case scenario, say you make 1 point, you get $50 out of it or whichever. So it depends on how you played it. This one, the Momo is going to tell you to get in, and the most that you could have made on this is $450. Honestly, right here, I can be done because I'll usually trade anywhere from 10 to 20 contracts. So if I traded 10 contracts, that's $4,500. 20 contracts is $9,000. So it depends on how you trade. A lot of people only want to make $500 a day. So You could have made that in that one trade. But let's just say you go ahead and keep on going, because I usually will finish out until, if we have news events, I'll trade up until about 8:15, 8:20, somewhere through there, depending on how it is moving, because they'll usually start chopping up before that news. So today, this would have been a trade, and right here is another trade. So there's another, roughly $400. So there's two trades right here, and you can be done for the day. A lot of people, want to get done before the U.S. Open and stuff, because the U.S. Open's hard to trade. Some days it flows real good. You can just get in and get a short or a good long, stay in it all day like it was yesterday, and do pretty good. Yesterday was a very good day. Yet there was a lot of chop, but at the same time, once it got through the chop, then it took off and it really did well. So here's one trade that we'll call this a break even. Give or take, you might have made a little, you might have lost a little, but we'll call it a break even. And then this one is going to be, we'll call it a point. Say you only made $50 there. So if you made 50 there, and let's say you made, 400 here, and so you had 400 here, and let's say you made 350 there. So it's about 750 plus that. So you got about $800 in profit on these three right here. So with these three, it's actually going to work out pretty good for you, and you could be done for the day. Now, if you wanted to keep on trading, now when we're in a downtrend, it's not always wise to take this long, especially when it's this far above down here. But, worst case scenario, you'd made $50 on it. And then right here is going to be a good trade because we are in this downtrend. And the most that you could have made is $400. So between these three, you would be up, and well, actually four, five. You've got five trades. You've got one that's a break even, maybe a loss, and then you've got five good ones. Well, you could be done. If you trade in one contract, there's going to be, call it, what we figure, 800 here, and we'll call it 900, and then another 300. There's $1,200 that you could have and not even touch anything. You won't even be doing any of this over here. So that's the way the Momo indicator works. It works really good when you're in a trending market, which is most indicators. But if you're in a lot of chop, you don't want to trade that. So let's go ahead and take another one here. So we're up, what did I say, roughly $1,200 or so, I think. And then you have another one here. And so you pick up a couple $100 there. So, call it $1,200 for all of this, and that's if you didn't get out where you should or whichever. That would have been a pretty easy $1,000. We'll go more conservative. Let's say you only made $1,000. Well, $1,000 per contract is really good, especially when you only had $500 invested in it. Most people that I work with, their goal is right around $1,000. I have some that are, $500, some are $1,000, some are $2,000, some are $10,000 and $20,000, and they have the account to back it up. So if you just played this, and you would be done by 8 in the morning, so that's about 2 hours worth of trading, and you'll be done. And then you have the news coming up. Now today was the payroll and such. So with that coming in, there was a lot of chop going into it and then a lot of whipsaw. You always want to wait until you get out of this because it'll just, the drawdown and so forth will just kill you. So it's hard to get in this because they will whipsaw it back and forth and just take all that money. So there's a chance you might make some money on it, but for the most part, you probably won't. So stay out of it. And then once it settles down and you come in, you get in it. So let's just say you didn't even get in this. I'm going to go ahead and mark it. But let's just say that you never even got in it. If you did, there's about $900 potentially you could have gotten. On this one, you're at 37, 39, so I would have still been in that. So on this one, we are still in a downtrend. So let's just say that you would have stayed in this and not got out, but you have a orange dot there that says to get out. So let's just say that you did get out and you lost $50. it would have got you back in here and you'd be up 600. Now this right here is that open. I don't trade this part right here. This is too hard to get in and out because the whipsaw back and forth, and they're looking for your stops and such in order to get more money. So this is very difficult to trade unless you get in. So you get down here at the bottom and just you're psychic and you knew that it was going to go up and you hopped in, you could have made a lot of money there. That one candle just to the top is $500. That's hard to trade. That's a 1 minute. So I don't trade that. I just wait until all this settles down. Once it settles down, and then where we went up, we come back down, we went back up, we have this big old wick here. That's a good sign we're going to be coming down. And then we get our signal here. So this is a good signal. That's 24. It pulled back to 28.5. So that's, 5-point stop is usually what I'll do on run the Momo. So there's another $400. But I just don't even trade this. The candles are way too big. When you have little candles like this, that's great. When you have these big candles, too hard to trade. Most people cannot do that unless they have a large account and are able to handle the drawdown. These candles are very easy. Now let's go back over and look at the difference between these candles. Everybody wants to trade the US Open, but that's why 95% of the traders lose money, is because they're trying to trade with the institutions, and the institutions will whip your butt every day. Hardly ever will you make money in this time frame right here. Say from 9:30 to 10, that's just a hard time to trade. Look at these little candles over here. Those are actually pretty easy to trade. Low drawdown. You can weather out the storm a little bit, and you would have been done with about $1,000 here, $1,000 or $1,200 you would have made right here, following the rules. So if you would have made that, say $1,000 per contract, you won't need to trade all this over here. You can take off and go about your life and do what you want. A lot of people just want to trade all day long, and you can't. Today I run a lot of errands. I didn't even trade in here. I traded a little bit in the afternoon. And if we look at this, we're going to look at, see how large these candles are? So let's go ahead and mark from 9:30. Now I'm talking Eastern time. 9:30 to usually about 10:30. So we're just going to put 9:30 to 10, block this out. But we still have a lot of chopness in here. So today, really you shouldn't have been trading until you got out of that. So really from 9:30 to about almost 11 o'clock, so let's just call it 11. Right there's 11. This area right here is going to be very difficult for you to trade. Now, I'm not saying you can't make money in here, and there's a lot of people that trade this successfully every day, but 95% of the traders are not going to trade this at all. I don't care what indicator, bot, or whatever you have, this is going to be hard. We have two bots that we run in this time. The super trend is at 9:30 open, but it's on a very fast moving tick chart. So with it running on a fast tick chart, some people can't do it, but a lot of people are very successful running that bot then. We also have one that starts around 10 o'clock or so, and that's an arbitrary number, but approximately then there's things you have to watch out for, and it's the mover. And it works pretty good when you go into here. So usually about 10 o'clock things start settling down and you can start trading. But look at all this. This is all chop. With all that being chopped, you can't trade it. It's just the candles are too big. You cannot weather it out. When you see big candles like this, just don't trade. Walk away from it. If you have to literally get in your car and drive away, do it. If you miss a trade, so be it. You can get the next one. So right here, we have a lot of chopping here. Would I have taken this short? Well, I would have probably got in one of these shorts and weathered it out, because we are making lower highs here and we're actually coming straight down. Excuse me. So if we look at this and see this right here is about the trend, that's close, but that's about the trend that we are following and we're coming up. Right here would be the one to get in. So yes, you could have got in one of these right in here and you would have made money with it too. So let's just make it a little bigger for you. So when you're watching this, would I get in one of these right here? Possibly. I might do that because, but I wouldn't get in the longs because the longs are just, they're not going anywhere. So let's just say that we did get in this one, potentially $150, but I'll be honest with you, I'm not interested in trading long when it's selling off. So would I have got in this one? Sure. Why not just get in it and stay in it all the way down through here? Or maybe you just go ahead and take little quick scalps and you wait on the next one, you get in it, take another little quick scalp. It pulls back up. Just because the Momo didn't go in don't mean that you can't go ahead and hop in your own trade. If you're seeing Momo is shorting and this right here, there was no signal for it because Momo held you in the trade. Momo held you in this trade right here. There was no signal to exit. There's no orange dot. If there's no orange dot, there's no signal to get out. Here is the signal to get out. But when it comes down into here, a big old drop like that, you don't want to wait for it to pull back to this trend line that you've drawn. You want to go ahead and just take some money. So let's just say that you got out right here. There's $600 roughly that you would have got. If you were, psychic, you would have got 912. So that's how you trade it. And a lot of people get caught up in the chop and forget to actually look at behind them to see what has happened and see the overall direction. Now this right here was really bad today. But if you look at these, if you see these lines, the Momo lines are real close to each other, that's telling you chop. When they're spaced out like this, those are good. So like from here to here, that's a good, that's telling you there's a trend again and there's no chop in there. But when you start getting these close again, that's a good indication not to get in. So when you look at this one and you see that we have some chop. So one thing you can do is you can go from the top here and you can come all the way down to the bottom right here. This is going to be your chop zone. But we broke out finally. When we broke out, that's when you want to go ahead and start trading again. When we broke out, yes, you did miss this trade, but that's okay. Because when we come back over here, we got in this trade right here. And then when it pulled back up, we didn't break through this right here. Momo kicked in again. You just go ahead and hop in another one. You keep on hopping in these shorts. This one right here, you hop in, it comes right on down. And it's telling you to get out of here, but I would not have got out of here. This is just whether or not the chop that you're in. You can see the next signal come in. My stop would have been right up here. That's where I would have been. That's 13. So that's 4 points. And what I recommend is 5 points on running ES on 1 minute. It's if you do 5 points, you're usually pretty good and it'll let it weather out. Typically, Momo will it'll be less than 1 point of drawdown, mostly. So if you're starting to get more drawdown, that's probably a good indication that you're in chop and you need to get out. So you want something that's got power drives, like this one up here. Right there is, actually right here is the entry, and there was no drawdown there, none. This one right here got in, there was 1675. That was 1 tick drawdown on this one. This one right here, we start getting drawdown. That's a good indication that we probably ought to get out and just not even trade it. So when you start seeing that you have drawdown, you're probably in chop and you need to get out. And just, weather out the storm, wait on it to happen. So this one, you would have come down. There's another 262. Would I have taken this long? No, would not have. Would I have taken this short? Probably would have, and I would have gotten stopped out because There's no way I would have taken profit at 37.50. This would have stopped me out, and I probably would have lost probably $100 or so. Because usually, if you go past the candle that you got in, that's usually a good chance that you're going to lose. Would I've got in right here? No, because this is just all big candles again. There is no trend. You want to have small candles. All of these are big candles. It's just too hard to trade it. Even right to the close today, we had these big old candles going back and forth, and all they were doing was just buyers and sellers going through there. They're just wiping out and taking all the money they could before the end of the day. That's all they're doing. So that's why I trade the London. Now, if we zoom in, and I'm going to go ahead and take all these off. Now, when we look at this, see these little tiny candles. Those are easy to trade. Low drawdown. You can go in, get you some money, and get out. Then you come over here. The U.S. Open almost always looks like this, and everybody wants to trade it. And then they give up any kind of money they made over here. They give it all back right here, and then they're crying about it the rest of the day. And then they spend the rest of the day trying to get it back. And the only thing they usually do is give back more. And then before you know it, you have no account. You've just blown your whole account. So that's why you don't do that. You just pick you some time. So let's go ahead and go back and look at another day. So here we are. We've got small candles. Now there was a lot of chopping right here, but if you look, we're coming down. So if you'd have just taken shorts all the way down or held into a short there, you'd have been fine. But look what happened when we got to the U.S. Open again. So the U.S. Open, there's 9:30 to 10:30, and it's nothing but really big candles that are chopped. Why would you want to trade that? It's like this every day. Very seldom does the market actually pick a trend and just go from the get-go. It usually chops up real bad up until 10 or 11 o'clock, and then it will take off. Usually 10 o'clock, it'll pick direction. Like right here, we would have missed that one, but we could have got this short. So on this short, we come down. Let's see, actually, the entry would be there. There's 1,050. But look what we got here. If we got in here, and let's just say that we stayed in this all the way and just let all this weather out on the same contract. You could have done that, and then when it got down here, taking your profit, or even here. But let's just say you took your profit there, 11.25. That's all you need. If you need more money, you add more contracts. So you could have made your money right here. I was in this trade. I took that trade yesterday. As a matter of fact, I don't think I traded maybe a couple more times during the day. I made my money right here and quit. All this up in here, you see all this back and forth, and you got all this chopping here. What you could do, and I was in some of that, and then I looked back to see what was going on, and then I just started taking my shorts. So what I did was whenever this, like this candle, I don't know if I was in this one or not, but when that pushed up to come down, you see that line right here, and that's our balance. That's what we're looking at, the TP1. That's what it's fighting on. So you just hop in a short here. And then once you're in a short up here, and you let all this weather out, you're in profit the whole time. You got your stop right up here. So your stop would be $75. That's going to be, what, 5 ticks? And then as you come down, you could have picked it up to here. There's $1,400. I didn't do that trade. I wish I would have. But there's $1,400. And let's just say that you let it ride all day. So let's go through and see what it would have done. The most that you could have made would be right here, $2,400. I did not do that. I was going to, and I actually thought we were going to go down to 40.24. That's where my thinking as we were going to go. And then we come over here, and then we just hit it and bust it out. Now, right here, we have these big candles. These big candles is going to make things hard on you. So, there's a lot of drawdown here. But when it went up and then it pulled back, look how it calmed down. It went down, pulled back, calmed down. These are good candles. Yesterday afternoon was a very good day to trade. all day long, there were small candles, and you're looking for small candles when you trade. And so yesterday, Momo killed it. If you just take this right here, approximately here, I'm just doing approximate, and then here, and about there, about here. And you're only going to take longs when you're going like this. You're not going to take any shorts. This one right here would, you would have actually weathered that out. You could have. But let's just say that you went ahead and used the orange dot. You would have lost a little money there. But see how this was going up and then it starts going sideways? Well, you can do one of two things. You could hop in, put your stop down here, and just let it play out all of this. Or you could try to take each trade. So just because Momo says it's time to get out here doesn't necessarily mean that you have to, because if you get in here and you can look back and see a gradual trend, you're better off just to let this play itself out. Put your stop down here and let it go. And you'll find that a lot of days are like that. So let's take, let's see here. Let me take another day. Just so you know, I'm not picking days or whatever. Every day is the same. So my day for my trading is going to be about, and I don't set an alarm clock or nothing like that and just, that's when I'm going to trade. I don't do that. So what I do is I'm usually up somewhere between 4 or 5 in the morning. And when I wake up, I look at the market. I just pull up my phone and see what the market's done. I use TD Ameritrade's Thinkorswim platform. And I just see what the market has done overnight and see if it looks like something that I want to even get up for. And, if it is, I'll go ahead and get up and I'll come in and I'll make a couple of trades and I'm usually done. And then I can spend time helping people during the day and running my company and being a husband, father, and all that stuff. I can do that all during the day. So I don't have to trade all day long. So we can see here we have small candles. Okay. Now we're coming in a downtrend right here. So we're just going to take these little shorts. So this one right here, it's going to come down to right here. And this one right here is going to be to here. These are small trades, very small. So you could have got, say, 3 points there, 3 points there, and probably 4 points here. So there's 10 points right there. 10 points is $500, and add your contracts to it. This one right here, coming back up. Now, why would I have taken this? Because when we pulled back, and then we started coming down, and then it went to take off again, I would take that. So when I see that, we have this big pullback, and then it goes, that's what I want to do. This one right here, turn my phone off. This one right here, when we pull back, I would not be looking to take a short, which it never showed a short, so we wouldn't have. And then right here, you could have picked up 4 points. Probably actually would have went all the way up to here. So when you're starting going sideways again, you have to decide, should I be going into a trade or not? But you can see this is going long, so why not just hop in along and weather this out, put your stop down here, weather this out, and let it go on up. We're looking for the SPY money balance. That's what we're trying to trade to. So we just wait until we get up there. There's 562.50 right there. So you made, 10 points over here. And then this one at 562 is going to be another roughly 10 points. So you got 20 points and you're done. So now let's go back over to the US Open. Let's see how it plays out. So we could have played all the way up to about right here. Right here is the US Open. So if you come in and go to there to about 10:30. So now we had a lot of chop in here, but it wasn't as bad. They were smaller candles. So this is one, when we have the smaller candles, you can decide what you want to do. I probably would not have got in until we got to about right here. So, and I might have missed that one and then just played off of these down here. I might have missed this move altogether, and I don't really remember what I traded that day. I'm usually done, so I probably didn't trade this at all. I usually just don't trade in this time frame. It's too hard for me to trade it. So when you look at this, you can see this was a downtrend day. It sold off all day. Candles are kind of choppy, but if you would get in based on the Momo, you would be fine. And the Momo would have got you in, let's see, actually it would have been in right there. And it said to get out right here. There's $2,200. And then it said to get in here, to get out there, and get in here, to get out there. And I would not be taking that long right there because we have been selling off. But let's just say you did. You probably would have lost about $75. And then this one right here would have weathered that out. And Momo said to get out right here. It's $1,000. Momo said to get out here, 75. And I would not have taken this long, but now when we come down and hit it again, I would take this long here. Momo said to get out right there. And this sells off again right here. I would not be taking these shorts at this time. I might take that one because we actually went below this low. So I'm not sure if I would have or not. And then when we come down, we bounce off of this. That tells me that we're probably going to bounce. I would have missed this trade, but if you would have taken it, that would have put you to Momo, would be 662. But what I'm getting at is you don't have to do all of those trades. You can make all the money you want right here, 6 to 9 in the morning, and be done for the day. So let's see if we can find another one. Let's see here. Six to 9 right here. So could we have made our money on this day? A lot of chopping here. But if you look back, we had a sell-off. And you probably would have taken this trade here. I know I would have if I'd started at 6. And the best you could have done was 225. You got to remember, you're only going to get 3 or 4 points usually. Well, 2 to 4 points on a trade in the London. You're not going to get those, 20-point moves that you get a lot of times in US Open. But you're going to have a lot less drawdown too. This one here, I would not be taking any of this. When this come out and come back into here, this is all chop. So personally, this right here is the chop I'd want to break out. Since we broke out here, I would miss that trade. Maybe I hopped in it, but I would miss that trade. And then once I did, I would be getting in again here. That is 39.25, 35. So I would have been within the scope of my drawdown. But let's just say that we just went ahead and took a small loss. We can hop in right here. And we can make money there. We come down. This one right here would be something that I don't know if I'd want to take. If I did, the most that you could have made would be 112.50. Your drawdown would have been 162.50. I probably would have lost a little bit on that one. I probably would have been in the probably about right here, $75. I probably would have lost on that. And then we have another long. But if you look back, we have still long bias. So you go in and here. And you make a lower high. So now we're looking to take these shorts. And honestly, if you went down to right there and this one to right here. So what we're doing as we decide to enter trades is we're looking in the back to see what has been happening. When we have all this chopping here, you're better off just to stay out of it. Wait till you get out. This one come all the way right back down into this chop zone again. So would you be taking these trades? No, you won't wait for it to bust out. And you don't know when that's going to be. And in this case, right there was a good trade that broke out, but we wouldn't have got in it because we never got in it after the break. We want to have one good burst out. So this is the day that you're not going to make that much money, but you still did well. The max would be 4, 6, 8, 11, 12, 13. So 14. So you still would have got your approximate $1,000 here. And if you need more money, you just need to trade 2 contracts or 3 or 5 or 10 or 20, whatever you want, and get your money. You're only looking to try to get 2 or 3 trades is all you're trying to get. You're not looking to trade all day long. So if you can get those 2 or 3 trades and get your day done, get your money, and then just quit for the day. Don't worry about what you would have missed if it was a very good day and you just missed the best trend day ever and you could have made $100,000 or whatever. Don't worry about it. Just worry about come in, get your few trades, and go about your business. Now, how will Momo help you with that? Momo does very good because it tells you your entries and your exits. So when you're trading, like this one here, for instance, if you got up earlier, it would have told you to get out there, 875, 2 contracts, you're up, say, what's that, 1750 for 2 contracts. 10 contracts is going to be $8,750. And honestly, 10 contracts is only $5,000. It's not a lot of money. So, if you got in 10 contracts right here, if you got in, that's at 56.75. You would have been 2 tick drawdown. 2 ticks. That's all you'd have been. If I'd got in here, my stop, I would have put it right up here. But you'd only been 2 ticks. When it started dropping, you could start chasing your candles if you want. This one right here, I don't know if I'd allowed that to go back up. When we started going down like this, I'd probably have my stop here. So I probably would have got stopped out right there. But if you only listened to Momo, you would have made more money. On this one, you would have been roughly $875 or so. Call it $800. So 1 trade and you're out. And then when this pulls back and then it says get in another one, there's another $900. So there's potentially probably $1,600 for 2 contracts there, or 1 contract from this trade and this trade, $1,600, probably what you would have made. So with having that, you're done for the day. And that was starting, that first trade was at 5 in the morning. So it depends on when you get up. London session is definitely easier to trade. Around 6 o'clock, a lot of times you will have some chop in there, and it's not favorable to you. But it does a good job. If you look at, let's see, London opened right here. That's when London opened, and he had some chop in there, and then all of a sudden it took off. It's usually about 4 o'clock, it'll take off. And that's what it did. So on this one, if you would have got that, you're looking at $1,100. I really believe that trading the London session is much easier. A lot of people can't get up, and I know like on the West Coast and things like that, it's hard for someone. Of course, the West Coast, it's at midnight at 3 o'clock in the morning. But they're trying to trade, like if they're trading like me, it's 6 to 9. That means they got to get up and be ready by 3 in the morning. So I understand that's hard, but if you get up and do that, get your couple of trades, you're done, go back, take a nap, just go about your day. So that is how I trade, and it works pretty good. And it looks like I have some bad people on here. So we're just going to, let's see here. And we're going to go ahead and just report him to, so we're going to report him to. That's what happens when you do stuff live. You got these people on there that are just not good. Sorry about that. I just saw it. But they're gone now. They're deleted and reported and blocked. There we go. So if you want to trade, I suggest probably the easiest thing to do is to use Momo. Spy Money Momo indicator. It's a lease, and you can find it on the front of my website. So if you go in, matter of fact, I'll pull it up and show you. Now tonight, my website is getting a makeover. So if you go to it and it says under maintenance, that's why. Getting a complete new site. Everything's going to be on here, but it's just going to look different. But if you go in here and you click on this one right here, and when you click on that, it'll open up. And currently, as this video is recorded, it's $800 per month. And with that, you get instructions on how to use it, tutorials and so forth. You do get the indicator. You can run this indicator on anything you want. You can use this indicator on the funded accounts, which actually tell you a little one. If you go into funded account, UProfit, click on this link right here, click on that logo, and then put this in, you say 40%. Apex still has 50% through, actually it's through June now, I believe. I need to change that. But they have 50% off. I think they do. Maybe not. You can try the coupon. My preferred one is UProfit. The customer support is not as good as, say, Apex. They're a little slow about things, but it's really the better one to use. It's easier to get your money. You get paid quick. Apex, it's going to take you 6 months to get paid. They give you a little bit here and there, but it's really going to be 6 months, and that's if you're a good trader and do everything in a timely manner. So the UProfit actually does a better job, in my opinion. So when we go up here and we start looking at different ones, and just to give you an idea, let's just take YM. I'm going to start trading YM. I found it to supposedly is a little smoother. I have not looked at it enough to know, but to give you for instance, let's see, 6 o'clock starts here. That right there would have been a bad trade. There's 175, 275, 85. I think it's $5 a point. So there's some decent little trades in there. I still think ES is probably going to be my better one to trade. You can also trade NQ with this. I'll show you that one. Where is NQ? There it is. So we can go back to NQ. I don't trade NQ that much. I traded a little bit today, but usually not that much. So on NQ, 6 to 9 today. So this one you would have been in here, and the most you'd got 290. This one you would have weathered that, I'm sure. And then this one would have been here all the way down to there. And so you'd actually make more money. I might start trading that again. NQ on the London session actually does well. The drawdown on this one right here would have been 145, so that's not bad. This one would have been a drawdown of 125, that's not bad. There is $35. I missed nothing. But if I can get in and be less than $300 drawdown on NQ, I'm pretty happy. This one right here is entry there, 170, so still good. The drawdown, that is, and you could have made money there. When this is in a downward motion, I would not be taking this one, but if you did, the most you could have made is 160. Maybe you got in it and put your break even up there. Maybe you made $50 on it or so. It's still money. This one right here, you could have been at 275. Again, when I start getting close to the 830 mark, don't trade. This is to get out of that trade was 8:18 Eastern time, so that's 12 minutes away from the news, so I would not be trading this at all. So at this point, I'd be done. So with this one, you have I'm going to round this off. 3, 4, 5, that'd be 6, 11, 17, 23, 25, 26, 27, 28, 29, about 2,900 gross. So you're probably, time this is all done, probably $2,000 is about what you'd be. But if you think about it, it's going to cost you $1,000 in margin. So if you spend $1,000 in margin and you did that with ES and just did 2 contracts instead, your value is about the same. Your profit margin, you're about the same. So it's whatever you feel more comfortable with. Some people hate NQ, some people love it. It is dancing with the devil. You have this big wick here. I mean, look at this one wick today. From right here to the top is $1,775 on one bar. I'm not good enough to trade that. I can't do it. The only thing you're doing is you're gambling. Whenever you enter a trade, you have to have your stop so wide for that pullback, because it didn't just like open up here, jump down, and then go up here and then pull back and close. It kept on modulating back and forth for a whole minute. I mean, this thing was just all over. So, and then when you come over here, these are big candles. It's hard to trade. It started settling down a little bit, but they're still somewhat hard. When it got to after 10 o'clock, it started settling down and started working a little bit better. So I haven't traded NQ much lately. I may go back to it and trade it some more. So I think that's all. I'll show you one more thing. A lot of people are using the reversal indicator with this as well. And the reversal indicator actually does a really good job. And it does repaint, so it's hard to trade on its own. But the way I repaint it is when it pops up red, it won't be red, it'll be pink, to let you know that it's a possible reversal. But as soon as you see the red, it's a definite. So that way you can get in. Same with the green. And then these purple ones, you'll have an orange that pops up. And then when it decides, the orange means it's not really sure what it's going to do. And then when it does decide, it'll go purple because it don't really know if it's going long or short. It's a neutral. And that's how it does it. So, but whenever you see the purple, it's buyer beware, because you don't even know what it's going to do. But when you see the red, it's usually a pretty good short. And where this is a reversal sign, and right there is the line for it, that doesn't mean that it picked it off right there and you could have just sold off. Because if it did that, I would be loving it. That would be a good indicator. But I can't get one to pick off the tick like that. But a lot of people use the reversal indicator with the Momo, and it's at least $150 a month. That's how much the reversal indicator is, at least. So, the one thing about the leads that helps is if you decide you don't like it, you just don't lease it anymore. Where before I sold the indicators and you had to pay out quite a bit of money to get it, and if you didn't like it, you were out a lot of money. Now you can lease different ones and figure out which one you want. You're going in for minimal money. When you figure out which one you want, then you stick to the lease on that one. So it actually helps you out a lot better. It's a lot better for the consumer. So I'm going to go ahead and cancel this stream. I'm going to start doing these more often. Just kind of go over how things work out. This is a good one for you to know when to trade, how to trade, what indicator is best for you. The Momo by far is the best one that I have. It gives you the entry, it gives you the exit. You get full description and tutorial when you lease it. You get all that in there, and it'll help you out. There's a lot of people making money. One guy made 10 grand yesterday, and he made 10 grand again today using the Momo. He uses the Momo, reversal, and mover at the same time. That's what he uses. So I'm going to go ahead and end the stream. You guys have a great weekend. Enjoy it. Have lots of fun. Take some time off. Enjoy your family. Have a good night, everybody.